Good morning, traders. It's 8 a.m. Chicago time on the first trading day of May 2nd, 2016. Thanks for joining me. This is another Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. The overnight news flow is pretty light. A couple of key elements here. The government of Puerto Rico is defaulting on its payment due today. The governor of Puerto Rico has already announced that they're not going to be able to make the $422 million payment. They owe another $1.9 billion by July 1st, and they're not going to make that. Not sure what effect that has on the market. The market's already expected that they're not going to be able to make the payment and has priced in those notes, those bonds at 20 cents to the dollar. Important to note, gold has crossed the $1,300 mark overnight. Gold traded at the high. Gold June 2016 traded at 1306, is trading at 1299 right now, up 0.66%. This is the first time it's done so since January 2015. Other than that, it's pretty clear. Um, uh, Overnight session as far as news. Coming into the day session, we're expecting U.S. manufacturing PMI final at 8:45 Central, 9:45 Eastern, expecting 51. Construction spending, U.S. construction spending at 9 Central, 10 Eastern, expecting 0.5. ISM manufacturing also at 9 o'clock Central, 10 Eastern, 51.5. Prices paid, 51.5. And then as far as speakers, Lockhart's already releasing comments as we speak here. At 9 o'clock Central, we're looking for ECB speaker Draghi in Frankfurt, so pay attention to that if you're in the Euro or European-based products. At noon, we have ECB speaker Lautenschlager in Lucerne, Switzerland, and then at 4:30 Central, 5:30 Eastern, Fed Speaker Williams in LA. Since it is Monday, a quick preview of the week. Tomorrow, UK PMI, Eurozone PPI, Fed's Mester and Williams. Wednesday has a pretty heavy load. German, European, UK Services PMI, UK Construction PMI, US ADP, Trade Balance PMI, Goods Orders, Factory Orders, and ISM all on Wednesday. Fed's Lockhart and Kashkari. Thursday, UK Halifax House and Services, ECB's Economic Bulletin, Fed's Bullard and Kaplan. And then Friday's a big day, German construction PMI, but more importantly, U.S. payrolls, hourly earnings, unemployment rate, and then Fed's Bullard, Kaplan, Lockhart, and Williams. So Wednesday and Friday have a pretty strong set of numbers expected. Let's take a quick turn here and look at what was expected last week, what we looked for on Friday, or what was accomplished on Friday. Let's see what is going on here. Okay, so this this looks like a terrible mess here. These are the flex levels for this week. There's a good explanation for this. Don't run away just yet. There's a lot that is clustered in the next 50 points between the all-time high 2105 quarter and 2050. Last Friday, the market broke through the weekly one-time framing price of 2065 and a quarter. We touched it on Thursday, and Friday we broke through it on the open. We actually opened below it, tested higher, and that's what was mainly expected on Friday. We're looking for we're looking for the market to test up, but overall, the expectation was for the market to fail lower. So here's your primary hypothesis on Friday. to open. Push up as high as 2070 and a quarter. Push up as high as 2070 and a quarter, but the overall expectation is for it to rotate down to 2055 and a quarter, a naked point of control there. That was the primary hypothesis, and that actually did work out. It pushed actually through to 2045.75. It tested up, didn't quite get to 2070 and a quarter. It struggled with that 65 and a quarter level, which was expected. Created a pretty dynamic, pretty dynamic setup there for the short. But overall, like I said on Friday at the Trader Bite, looking to push the short side again. Important. I've noted it in red here on your flex levels. The breach of the one-time framing up at 65 and a quarter is really important to note. The market tried to make its way back up. We did have a very interesting one-tick test of the low at 46 to 45.75 back here. And then the market rallied back up. It seemed to have found its sellers on a one-tick, almost looked like a one-tick failure. You can see the taper on the volume as the market reached these prices. There was just very little interest. That is not a weak low, even though we have a double bottom. That low is reasonably strong. I've marked the pivot point. I've marked the low of last week, and the pivot point is right there at 45.75. Going to keep an eye on that. The next key area down is 2040.50, and I'll show you why that's important. Let's have a look at the monthly profile here for a minute. Here's what we've accomplished. This is what we accomplished in March. This is what we accomplished in April. You can see that there's a lot of compression in the range in April as we pushed new all-time highs. We took out the all-time highs from last summer. A lot of compression. The prior months had pretty good range, pretty good volatility. April was definitely, in my opinion, a tougher month. You could see that January was just beautiful, beautiful range. February was an inside month, but it was an elongated, decent range as well. And then March continued to break higher, range compressing a little bit, but then April just a tiny little box of range. But what's more important with April is the distribution of trading. So what we did is we opened down in here. We tested lower, and then we broke higher, and we ended up building this high volume node up here that we've marked for a while in the 2085 area. The market pushed to the high and came back off, but then we have a clean and clear double distribution. Where is that double distribution cutoff? Where is that low volume node that's separating the lower distribution with the upper distribution? You've guessed it, 2065 and a quarter, which happens to also be the top of month on March. So we are trading currently with the S&P trading at 2065.75. We're currently in between these two distributions. I'm looking for that 2040 to get tested. The healthier auction would be for it to move to 2040, test below, and then find its buyers to try again the 2065. But this morning, we're opening right against this low volume node right here at 2065, causing it to be a questionable, a cautious, or let's call it a precarious area for the market to open. Again, this Trader Bite's going to be a little bit longer than usual because we're going to go over we're at the beginning of the month and we're at the beginning of the week. On a weekly basis, this is what we accomplished. This is what we accomplished last week. We took out the one-time framing low. So if we look at, if I zoom out here for a second and show you the lows, you could see that we have basically, since the low we put in February, the second week of February here, we've been one-time framing up, higher low, higher low, higher low, higher low, higher low, higher low, again and again. and again, and then not last week. Last week, the higher lows end. That's what's called one-time framing up on a weekly basis. That's why it's important. This is generally the first sign in the auction that the trend is stalling out. And in general terms, not specific here, in general, one-time framing up continues, and then it's broken, and then it looks like it's about to continue again, and it generally goes into balance, and then you have, if it does have weakness, then you have that rotation down. One-time framing up pauses. We have an inside day or we have a lower day, we have balance, and then generally if it's going to rotate down, then it starts to make one-time framing down, meaning lower highs like we had here, lower high. So this week, this past week, we'll start the one-time framing down. Or actually, this week we'll start the one-time framing down as long as we stay below the high of last week, which was around 92, 93, which is actually a double top area. So as we look up here in the a little bit higher up here, you'll see it marked that I put down that it's a double top area. Where is it? We had a double top right here at 2094. This is going to be a key price above. So key areas, 2065 and a quarter, which is where we are now. 2040.50 is the key target below. 2076 is a key short test, initial short test above, and 2094 is the weekly one-time framing down, double top, and weekly high from last week. A lot going on. And like I said, when I first started this, there's just a ton going. Look at all those levels squished together. I hate when that happens. It just becomes a very noisy trade. But right now we're at 65.50, and that's how things are shaping up. Okay? I know that's a lot to digest. Take your time. Maybe listen to it again. But there's a lot to be looking at this week. On the overnight session, so on Friday, we came in and we had the sideways session that broke lower right at the open, and then we were just not able to get back up, and we ended up making this W shape in the day session on Friday. Looked somewhat bullish, but the area we were in, very very tough area. And then let's turn these indications off. There we go. And then last night through today, we pulled back a little bit. We pulled back a little bit, sit sideways through the Asian session, and then we start moving up on the European session. The DAX is actually the strongest future right now that I'm monitoring. It's up 0.73 or 74 points, followed by gold and the Euro stocks, and then the Russell. But so far, it looks fairly strong. Which would be great. Actually, I'd love to see it push back up into that 76 area. I'd love to see it push up here, and I'm looking for failure here for about 6 to 7 points on an initial test. So that would be nice if that's set up. But the overnight session looks fairly balanced to bullish. It's got an upward skew. As far as what we're looking for this morning, very tough, as I had explained, very tough to put a primary hypothesis on this. But coming into the trade, we need to have some sort of a plan. The expectation is we open somewhere in this key pivot, this red line here, and the expectation is we're likely to attempt lower. The inventory is positive overnight. Looking for it to test lower. I'm looking for an open auction in range or slightly out of range, either case an open auction. Looking for it to drop lower, make an attempt to push through, and then start working its way back up. Target being 70 and a quarter above, and then 75. I'm looking for 75 test, 76, and a rotation down for at least, like I said, 5 or 6 points. This will be the primary hypothesis today, or the primary trade for the day. If we open up in an auction and push higher, first find sellers again as we did on Friday and start moving down, then I'm looking for a test of the point of control, which is in the 59 area. I'm looking for a test of the point of control, an attempt to push out of the range again, and if it pushes back in, then your target is likely to be this 51 and a quarter, and then the weekly pivot again, or Friday's low, which would be 45.75. That would be hypo 2. So hypo 2, initial up. The key move is down, an attempt to push out again, and then the big move is likely to come out later, and push us through the range, the entire value area, and through Friday's low. Again, the extended target would be 40.50. Those are your two key ideas for the week. So that's that. Hopefully, you're able to follow along. If you get confused by any of this stuff, I want to remind you to just go on futurestrader71.com, go to the video archive, and just watch some of the old videos to get an idea of how an auction works. The most efficient way is to just contribute to the webinars. I'm not trying to sell you those, but it's an accumulation of all this information. Another thing you want to keep in mind is I'm going to send a survey out this week. I'm creating a trade wisdom session, but I want to feed off of your information. And a key element I want to push here is, what are you working on this week? What things are you focused on this week? If you are not deliberately practicing something, in other words, if you're not pounding away at some weakness you have, then you're not really getting the most that you can out of your trading. So just a quick note, on Mondays, well, preferably Sundays. Sunday night's the best night to do some homework. Just decide what it is you're going to work on this week. Identify your weaknesses and just hammer away at that weakness. And it requires you to deliberately be in an uncomfortable position to take that on. For example, a weakness that I see often is letting the trade run out without fiddling or micromanaging it. It'll take every fiber of your being to put on a trade according to your plan and just sit and let it work its way through. Your goal this week is to make sure that every single trade gets gets the room, or gets the practice of letting it run. And just because it didn't work today, it means you need to focus on it. You need to focus on it, and you need to focus on it. That may be a weak area that you identify. Once you've practiced it enough, once you're consistent enough and routine enough with it, it becomes something that is not as uncomfortable as it used to be. If you're coming in here every day and doing something that is comfortable, chances are there's no growth. There is only excellence in discomfort. That is the truth. You're not going to lift more weights by keeping the dumbbells that you lift light. You have to exert some tension. You have to create some stress, some discomfort in order for you to grow, in order for you to adapt mentally or physically. I didn't mean for it to be a trade wisdom session right now, but I'm really going to be looking for your responses this week. Look for a survey on Twitter. Thanks for listening in. Good luck. Take care.